Good morning, Mike. How are you?
I'm well, Roger. How are you?
Excellent. Most excellent. I've got no complaints. As
long
as I don't look at my RSPs in the stock market and stuff,
No,
right? We don't want to look at that right now, do we?
Remember how fun it was when the markets were hitting records and nobody was paying attention?
Yeah.
Well,
we are now.
It's front page this morning after a two-day sell-off of almost 2,000 points in the Dow, the biggest two-day tumults in history, in fact, for the blue chips. Of course, we are at these elevated levels where just a week ago the Dow was close to 30,000. This morning it's just above 27 grand. But when you look at the
long-term
cumulative, well, I was going to say the cumulative effect of the coronavirus going through the global economy, $1.7 trillion has been wiped out of global market value just in the past week here. And it wasn't just Monday and Tuesday. The Dow's been down 6 of the past 7. The TSX, which sort of was an outlier for a while, has sort of started to catch up to this a little bit here. But again, long term, we talked about how these markets have gone up and up and up.
Gangbusters,
That's right. 2019 was a terrific year, and it started well, and then all of a sudden it's the big reset. Because, you know, if airlines aren't flying, that means hotels aren't going to be doing as much business. You know, the global travel industry, production, all of this stuff, it's the risk assessment, and that's what the markets are doing right now.
Yeah, and so we'll see what happens.
Again, it is still too early to say whether today is going to be a money loser, money maker. You know, we're going to see volatility. We didn't actually see, what's interesting, a panic sell-off. And market pros would say you have to see that, everybody throwing in the towel before we actually reach the bottom. So we could see a little bit more selling. Price for oil is close to a one-year low. Got to mention that because the price for gas has been coming down too.
All right. Okay, so it is an interesting time.
Yep.
Let's talk Disney for a second. Some changes up at the top there.
Yeah, Bob Iger stepping down. He's almost 70 years old. He's been at the helm of Disney for 15 years, took over from Michael Eisner back in the day, and has transformed Disney into just this gigantic company after the purchases of Pixar and Lucasfilm and Marvel and Disney Plus streaming. And he's basically saying, look, it's the time to make the transition. He's not leaving or anything of that nature. Bob Chapek, who is the head of Disney Parks, is going to be taking over the big shoes to fill, obviously. But when you've done all of these things to transform Disney, also 21st Century Fox, they bought that too, for goodness sakes. You know, 400% gain on the stock price. Yeah, you could probably take a little bit of a respite at this point. Sure, you know, it's going to be interesting. The stock is down a little bit because, again, it's sort of, he had hinted at his retirement plans, but not making them official, and it's a big change.
Yeah, but it probably should be a smooth transition. Mike, thank you very much, sir.
Thank you.
Have a great day. We've got more on BT coming up in the snow after the break.